Welcome, everybody. This is The Big Picture. I'm Rich Swerbinski with Onward and Upward Consulting, joined as always my esteemed colleague and co-host, Rob Krisman. Rob, good to see you today.
You too.
On the home front in Reno, Nevada today. So,
Well, I'm in Reno, Nevada.
I know you'd mentioned potentially moving, so you're divorcing yourself from Reno as your home, it sounds like.
Reno has its proponents.
Well, lack of income tax, right? Isn't that a,
That's a plus.
yeah, I
It's a
would
big
think.
plus. Yeah.
I send out a free commentary. There's not a lot of income to shelter, so why not move over with the granddaughter?
Solid point.
3.5 hours away. So anyway, we digress. Rich, you didn't even introduce Sue. I know everybody knows who Sue Woodard is.
I was about to, but of
Oh,
course,
go ahead.
native Minnesotan and one of our favorites, somebody that everybody knows and spent a lot of time in this industry, financial services, as an originator, and as a very well-traveled speaker and fintech exec. It is the one, the only Sue Woodard. Sue, good to see you today.
Thank you. I have to jump on this call once in a while just to get my ego boosted back up. But it's you are just two of my favorite people. Loved the last time we did this, probably a year ago. And so it's good to be back in the house here. Thank you.
I get on this call, Sue, to have my ego taken down a notch.
Sure.
I wanted to start off with forget the script. I saw a chat. Rich, I can't look at the chats.
You can't.
But the chat that just came up.
An AI assistant.
Those are popular now on Zoom. Yeah.
So, Rich, you want to read that to the audience because I want Sue to talk about AI.
Okay. It says, "Hi, I'm an AI assistant helping Justin Hughes take notes for this meeting. Follow along the transcript here, blah, blah, blah." But yeah, it's automatic note taking.
So, Sue, AI, is that our future or is it like blockchain, a flash in the pan?
No, I think this is definitely going to be a part of our future. It's just going to be the question is exactly how. What is it going to mean? I think one of the most interesting things that I saw lately in the world of AI is Scott Payne of Shape Software reached out to me and we were chatting about something and he showed me this video and kind of had this goofy hat on, was talking about something, and I was like, okay, cool hat. Like, why'd you show me that video? And he said, that's actually not me. I said, what? Because that looks like you and that sounds like you. And he said, yeah, but that's not me. He said, it's an avatar that I created. It basically, you do some things and it takes on, it understands what your facial expressions are. You talk long enough that it picks up all of your voice patterns. He said, I can write a script, or he said, pretty soon I'm going to be able to get a script to be able to be written. And that one kind of threw me for a loop where I was like, that starts to raise up some very interesting things about where that could go in this industry, especially as we do start to talk about, some of the things I know we've got on our list about you may not know. So, I mean, when you start to talk about cost, some of the different things that that we're looking at in the industry, I definitely think, and I will say that I'm somebody that I have not personally gone deep into chat GPT. I remember that very cautionary tale that was shared a couple of years ago at the MBA Tech conference, where basically we all wanted to leave and take our families to undisclosed locations because he was like, the car is out of control and it's driving and there's no guardrails and there's no brakes and who knows where this is going to go in the world. And he was devoting kind of the rest of his career to trying to keep it on the tracks. But I think there are actually some very interesting possibilities for the mortgage industry. And I will tell you the name of that, the avatar software, Scott told me it was HeyGen. So it's HEYGEN, if you've heard of that. That was the first one I've seen in a while that kind of caught me like, whoa, that caught me off guard. And it's interesting to think where it could go. I mean, I don't know. What do you think, Rob?
I'm the wrong guy to ask. I first heard about Chat GPT from Rich.
Last week. I know, it was shocking development.
I hadn't heard of it. 9 people out of 10 don't know what the GPT stands for. Uh, people ask me, oh, are you going to start having that write your commentary? The answer is no. But it's scary. It's the same. I view it as the same as what happens in biology. Just because scientists can clone a mammoth or create a mammoth, do we want them to create a mammoth? And scientists say, oh, no, no, no. You talk about guardrails. No, no, we're not going to do that. Or we're not going to bring back the plague. Or we're not going to do that. We're not going to bring dinosaurs back. Who would want to bring? But there are scientists out there who probably can get the DNA from some prehistoric ant and just to see if they can do it. And suddenly we have prehistoric ants, Jurassic Park.
Right.
With AI and GTP and these avatars, these IT folks can do this. Does that mean we want them to do it?
Exactly.
We've got a presidential election coming up. What's to stop? I mean, they already do it, right? They already inject words into Biden or Trump. I saw a week or 2 or 3 ago an supposed interview with Kevin Durant, where he brings up Matt Ishbia. Well, it's fake.
Yeah.
But you don't know that. And suddenly on your TV, if you're, somewhere and wherever, and there's Joe Biden or Donald Trump or any political figure talking about whatever, and they look real, but it's not them saying that, how is some 70 or 80 or 90-year-old voter going to know that that's not real?
Exactly right.
Deep fake, right?
Get carried away.
Yeah.
Carried away.
Yeah. Yep. But you start to think about, well, at some point, if AI and avatars can, be loan officers and they can be consumers and they can be and all of our AI will just go out there and talk to each other. Somebody put the comment in the chat about college students. Kate, thank you. Having AI record classes and write papers for them. I'm saying the AI professors are probably going to grade them. And at some point, like, what are we doing? And I will tell you my concern about it is very much like looking backwards at social media. Now, you all know I'm a big fan of exactly one platform, which is LinkedIn, because I decided that's my platform. I don't really do much anywhere else. But when somebody asked me a couple of years ago, they said, if there could be one thing that you wish was uninvented, I would say social media, because I think it's by far done way more harm in the world than it has good. I do, even though I'm a proponent of my little slice of it. And I have that big fear about AI as well, because where is this going to go? And once it's out of the box, it's out of the box. And it may be already, to your point, Rob. People are going to build what they could build. They're going to do what they can do. If they can capitalize on it, they're going to. So
I'm with you. I think people will look at social media like 30 years from now, the way we look at smoking cigarettes now. Like, I can't believe these people were like chain smoking in grocery stores and, on airplanes, like, knowing the health risks. And, I would agree with you, Sue. I'm obviously very active on LinkedIn. I'm same as you. I use social media zero personally and just professionally. But in AI now, it does bring up new, more deep fake concerns, sure, to be sure. So interesting to see how it will all play out. And as we get into this, so
I do have one. Sorry, go ahead.
I was just gonna have Rich. What did Ira just say about?
Ira said deep fake, et cetera, also has the potential to impact cybersecurity. Somebody can easily clone or fake the voice of a manager, owner, et cetera, to have an employee do something nefarious. It's a great point. I mean, we think the wire fraud problems are bad, bad now.
Yeah.
Your actual boss calls you.
It's like, hey, Ira, email me the database of all our loan transactions, with all that NPPI for the last 3 years.
I mean, Rich, my team is already working on replicating Stephen Milner's voice and calling Ira to say, I'm in the Philippines. I can't get out. Ira, talk to the CFO, send, wire this money. So anyway, coming to a theater near you.
I'm into a theater near you. So
right on. I do think the last comment I'll make on that one of the things we were talking about at Stratmore is that there is a big difference between You see sometimes technology vendors and so forth coming, putting AI on everything to give it a little, sizzle and sex appeal. There's a big difference between just workflows, automated, workflow automation, business processes that are preset, and actual AI. And so when you see people throwing that term around, it doesn't mean, oh my gosh, this is something amazing, or this is something scary, but you got to click a little deeper to say, is this actually AI, or are we just using that term because it's the newest cool buzzword to use? So food for thought.
Well, one of many reasons we're so excited to have Sue on today. A couple reasons. One, I just right now, Sue has kind of made a living on just customer experience, the importance of customer experience, customers' relationship with technology, lenders' relationships with technology. She wrote an incredible piece a few months ago on the Stratmore blog, and it was titled "Couples Therapy for Lenders and Tech Companies." And I looking very forward to getting into that and the importance of customer experience. We're going to get into all that. But Rob, I got to start with you. The election now, we're less than a month away from the first debate. I can't even remember ever in my lifetime when there's even been one question about housing policy in a presidential debate. How many questions in the June 27th debate do you think it will be before we get one on housing prices, and all that?
A question or the mention of housing?
Because, in these presidential debates, typically you're hitting the biggest red meat right out of the gate, the border and inflation. And how long before housing is a question is posed into the debate?
I don't think, in my opinion, housing. All right, I'm going to fly in the face of every expert out there, right? I don't care. Housing is not an immense issue for either candidate. Biden mentioned housing during the State of the Union address, but it's easy for people to argue that if you're qualified, you can get a loan. There are ample number of lenders out there, a lot of investors out there. The secondary markets are working, the capital markets are working, underwriting guidelines are what they are, non-QM. I mean, things are very much functioning on the lending side. So if you want to talk about the supply of new housing, I would argue that there's not a lot that a president can do. The president can't get down so much into the county level and say, change your zoning. Allow affordable housing a quarter mile up from the Serbinsky household. And then, Tuesday night at the hearing, Rich, you'll tote out everybody and they'll clamor like, we don't want affordable housing in our neighborhood. You can't, as a president, you can kind of direct things, but nothing's really broken. Now I'm saying that people will say, well, sure, affordability. But affordability is a combination of many factors. Interest rates, okay? The president does not set interest rates. You throw in homeowners insurance. The president doesn't set homeowners insurance rates. It's a matter of fees. The president doesn't set fees. So it may come up, housing may come up as a topic. Renters, you can talk about rents are going up. The president doesn't set rents either. That's a matter of supply and demand and whatever landlords are going to do. So there are a lot of factors out there, and those same factors, lack of supply, increasing rents may have been an issue 4 years ago, 8 years ago, 50 years ago. I don't see enough new going on in housing that is going to warrant using up valuable time or a reporter asking a question about housing per se. So I'm going to say there won't be a question, but one candidate or the other may bring up housing like, oh, housing's unaffordable and it's your fault. And there's plenty of blame to go around, but I don't see it being a specific question like, what are you going to do about housing?
But didn't
Wow.
Biden actually bring up that there was going to be this plan? And I don't remember the specifics off the top of my head, but whether it was first time home buyers, you're going to get X number of dollars per month to help you for the first period of time, which here we go in an election year when we're getting ready to hit our, I mean,
Let's eliminate student debt and give
yeah, I mean, yeah, but I don't want to go too political, but I do think that question is going to be raised about suddenly we seem to be finding, free money for every cause. And so that was thrown out there. I don't remember if it was in the State of the Union, but it was like, hey, and I think it was for first time home buyers, if I remember right. If you're going to buy, then you get X amount of money for 2 years and,
but Sue, if I were to give every first time, everybody who didn't own a home, $1 million,
yes,
okay, $1 million, the government gives everybody, let's say $500,000.
yes,
Knock yourselves out, go buy a house. Well, there's not enough houses to buy. And suddenly, I mean, I just saw what was it, the FHFA price figures were just released, or some prices just came out yesterday or today. Another up 6% for the year. Well, slow and steady. And who that hurts are obviously the people who don't own a home. But if everybody, I make the argument, if you had programs out there, 0% down, 0% interest rates, come one, come all that does is jack up the prices of first-time home buyer homes. And we're seeing
I agree. I agree.
So,
But it's something that could get asked, given that was thrown out there, which I think there's a world of first time home buyers are standing on the sidelines saying, goody, I want mine. Now I got my
right.
student loan, got some, money forgiven there. Maybe now I can get another handout. And that's enough for some people to vote a certain direction. They're going to pick their issue. So I think it could
Maybe.
come up. I know people have talked about the conservatorship coming up, and kind of how that would go, Trump versus Biden, but I don't think that's on the minds of your common householder out there, or frankly, probably your common, person in the industry. I don't think that's going to come up in the debates at all.
I think I just saw a poll. Inflation has just now surpassed the border as the #1 issue overall, just for voters. Shelter, housing related components, I think it's 42 or 43% of, total GDP and inflation measures. So we'll see. I do think it will come up fairly soon in the appreciation, 6.6% the last 12 months, but 43.4% nationally the last 4 years. When you're talking about historical increases of 2 to 3%, I'm the only one talking about this. People seem to think this, to me, there's a correction coming, not anytime soon, but I do think that I do think it will become a big part of the narrative as we get into the debates and the election, just because it is impacting so many people, either aspiring homeowners or, those that just bought. Sue shared a great column with us in the run up to the show from our friends over at Clever Real Estate. 38% of home buyers in the last 2 years admitted to overspending. 37% admitted to exceeding their budget. 82% expressed regrets. I mean, that's like, like a drug habit. I mean, so, I do think that, and 43%, kind of the headline on that, 43% of recent homeowners admitting to struggling to making their payments each month. So, Rob, your hand was up.
So a couple weeks ago, Sue, I get those clever company, which I didn't even know Clever existed like a year ago, but suddenly they throw out some pretty sensational surveys. And there was a survey that was sent out about a month ago that said 1/3 of Americans are planning to move in this moving season. And so I thought, what the hell? Really? 1/3, 100 million Americans are going to move this summer? Really? 100 million? There aren't that many U-Hauls out there, or Ryder trucks, or moving companies, or 100 million. So I wrote back to the person who sent me the survey. It was, just some email blast. And I
Right.
said, really, a third of Americans, so 333 million people. I don't know how many people live here exactly, but really 100 million people are going to move in the next 3 or 4 months. And they said, well, it was based on our survey of 1,200 people. And that's all at least they wrote back. It was based on our survey of 1,200 people. I felt like saying 1,200 people out of 333 million. Who were the 1,200 that you asked? Were they college students who were going to move out of their dorms? I mean, who are you asking? So I read some of these survey results, and I think they really need to. You really need to look at who's doing the survey and what the survey size is and so forth. And I didn't see the question asked of the 82% who were, what was the 82% were unhappy? What
82, it was,
Expressed regrets.
yes.
expressed regrets. It would be interesting to ask the 82%, okay, would you do it again? I don't think they would all say, no, if I could take back buying a house, I would.
Yeah. That's a
Especially,
solid point. Yeah.
especially
Yeah,
if they've
Some
seen the
of it is
value
they're
go up.
learning, oh my God, home ownership is a thing. We actually, we have to take care of, I think about, we probably all have kids who've bought homes and, have discovered, wow, there's a lot, there's a lot of stuff that has to happen with this. There's a lot more money. There's a lot more upkeep. You can't just call somebody. You actually have to take care of the pipe that cracks and the thing. And, but to your point, I can say that for my daughter, despite her, issues she's had with her house, they would do it again. So
Yeah.
solid point.
I would like to know of the apartment dwellers out there, do they regret not buying a house? Or I'm sure surveys are done on apartment dwellers because the old saying is people don't grow up wanting to be a renter.
Right.
They want to own a home. And sure, uh-oh.
I told you there was a cat.
If Myrtle gets within reach, I will
Are you sure it's not a deep fake? Is that really
Yeah,
Myrtle?
right.
that's an avatar
Yeah,
of the
wonder.
cat.
Yeah,
But anyway, home ownership, I mean, we're talking about home ownership. I don't think there's a whole industry devoted to renting. I don't think that there are panel discussions about renting. Oh, here we go.
Let's see a Myrtle sighting.
the legend.
Oh,
Trophy cat.
she's
How,
looking
how old is
good.
Myrtle? How old is Myrtle these days?
Well, she's about 12, 13.
Oh, wow.
Trophy cat, yeah.
Trophy cat. Look at her.
You'll notice one ear dips down.
Mm-hmm.
That's a whole breakout session story on that one. So
And that's Rob proving Myrtle's real as he throws her across the room. I thought maybe the Chrisman LLC AI scientist had
I do
concocted
think,
her.
one of the biggest takeaways I would say that I had from that survey, and to your point, I didn't click down into their sample size and so forth, but some of them are, this is just, it's part of buying a house. I mean, a lot of them said like, we spent too much. It's like, well, of course, houses are, high priced right now. We felt the interest rate was too high. Everybody feels that way right now. There's a lot of these things where I do think that there's, there was actually 17% in the survey said that they bought the house sight unseen. And so if you did that, then that's on you if there was a problem with the house. And there was 20 some percent, I forget it, 21, 22% said they felt like their agent had actually, kind of pressured them, to go ahead and buy something. And so there just was more of this feeling of kind of like, this wasn't a very good process, which, even in a tough market, I mean, I think the lesson there is just, we're dealing with people right now that are generally, when people are buying a house, they're going through some kind of life change, getting married, getting divorced, getting engaged, somebody's born, somebody died. There's something emotional going on, during this process. And we're dealing with people that are doing this at a time that, we need to make sure that we're educating. I mean, I always bring it back to just, educating about, yes, we are in a unique, time right now, but here are still the advantages that you're going to get over renting. Yes, rates are higher now than they were a few years ago, but let's look, with a historical perspective, and that you can refinance in the future. Let's, I mean, I think it's just the education, giving them that perspective, so it doesn't leave this like, kind of like this negativity about, you achieved the American dream, you bought a home. I think you're right, Rob. Nobody's going to, say, gosh, I wish I wouldn't have done that. But I think we need to be mindful of guiding people through this process because they haven't seen, in many cases, the great days. They just saw this was their experience and it didn't seem very fun to them. So
Yeah, the 82% who have regrets, they should tell all the millions of potential first-time home buyers, stay away. You'll regret it. Maybe that'll eliminate the first-time home buyer problem because then the potential first-time home buyers will have been warned off of wanting to own a home.
yes,
I don't think that would dissuade them. It's like, oh yeah, you got to call a plumber. You can't find a plumber. Oh, I had to buy an air conditioner. It took a year to get here. And oh my God, the irrigation in the yard broke. And well, do you not want to own a home? No, I want to own a home, kind of thing.
yeah,
It's yeah. And the folks who are on this call, we can sit here and talk about surveys all day long, but they are the ones dealing with borrowers who
right on.
still think they need 20% down to buy a home.
Yeah,
Or are dealing with borrowers who don't know about down payment assistance programs and so forth and so on. And those things are out there. And it's just a matter of making sure that your staff is educated as to what programs you have, what kind of intermediate arm programs you have, how you help, how your loan officers can help their clients. Interest rates are what they are. Homeowners insurance rates are what they are. You just try to use the tools that you have to help buyers.
Good discussion, and it'll be interesting to see as the election draws closer and the debates, how much this weaves its way into the narrative. And but yeah, housing and housing affordability, more specifically, certainly becoming more of a pain point for Americans as we go into an election that's pretty much deadlocked as we head into the final stretch. So
I did
wait a
actually
minute,
on that.
final stretch. We still got like 5 months to go.
I mean, we're in the home stretch, right?
Oh, it's been a long 3.5 years, Rob.
I know. True.
We're in the home stretch. I just saw, by the way, a survey, National Mortgage News. It's just popped into my email inbox a little bit earlier. And it was a survey. I don't know how many people they surveyed. Now you got me thinking about it, but they asked mortgage bankers, accounting, insurance people, et cetera, which party that they would vote for. And do you want a guess of what the percentage was between Republican and Democrat? That National Mortgage News says that the mortgage industry is voting. What do you think the split is? Rob, you go first.
Let Rich go first. I've been doing all the talking here.
Rich.
70% Republican.
Rob?
I'm basing that off of when I've seen Democratic speakers at the MBA conferences, the reception they get.
I'll say, gosh, 60% Republican.
It's actually lower than I thought. I would have guessed both of yours, but it says 45% Republican, 27% Democrat, 2% Libertarian, and 16% undecided. But
I like Libertarian.
That's a whole other breakout right there too.
They just had a convention, right?
Have you seen their candidate?
Oh, but I hear Donald Trump got booed there.
Anywho, but
anywho,
that's interesting. Anywho, that's what we say in Minnesota when we're trying to move on. But anywho,
wait a minute, who's their candidate?
You know what? I just saw.
I thought it was Eddie Who.
Aaron Rodgers.
No.
Is it Aaron Rodgers? It's RFK. That's right. Yeah. It's
no. Well, I'll find a picture and send it your way. But I do know that also if there are people that are, I mean, let's face it, I think the odds are 45% said that they were voting Republican. I think there's lots of people that won't say it. I think they'll say undecided or they'll say Democrat.
We got a long way to go.
True.
It is a long, and it is a long road to hoe still, even though I just said we're in the final stretch. And yeah, I mean, one candidate falling asleep on stage, the other that is on trial for hush money to a porn star. It's like, Aaron Rodgers was almost on one of the tickets. It's only.
Where are we?
Good God Almighty!
I just keep wondering why we can't find anybody under the age of 70 who people would vote for.
Listen, my radical plan, I've talked about it on the show.
Walden, AI.
is to pay politicians like professional athletes. Like the president should make 30 million a year. That way you would draw the talented people out of the private market, you know. You know, and then you would completely eliminate campaign finance reform. Uh,
True. That's right.
Completely out and just pay the politicians, you know, to lure out good people, but that'll never happen. So, but
Casey, by the way, said AI can solve one of those issues. So, we'll see what happens.
speaking of AI and tech, so you wrote a column that was phenomenal, just got a lot of traction on LinkedIn and the interwebs. I think the title of it was
Interweb.
couples therapy for lenders and tech companies.
It was,
I thought it
yeah.
was the perfect analogy because it is like what lenders and like all tech is not bad, and but yet, you know, I think a lot of just factors have gone into the way that mortgage lending decision makers perceive tech now. Inside that column that you wrote was some really interesting analysis that Statmore did, surveying lenders, asking their biggest
Yeah.
points. It was like prioritizing multiple projects and vendors over promising and integrations. But if you could, yeah, just walk us through like the tenor of that piece and
Where
right now,
was it? Where was it published? How can one
Uh,
read it?
on Stratmore. I'll pop
aren't you a Stratmore employee, Rob? You know, you should
Should
have.
I, did I write about this column, Sue?
You were
I think you did.
you were a co-author of it actually. No, I'm just kidding, but
Or at least your
or
avatar
maybe it
was.
was
I
your
don't know.
deep fake. It was
You gave me really glowing reviews, but oh well. Yeah, it was an article because I have certainly, having been on the lender side and the vendor side, I've observed this for a while, right? And that there is a very and I think a very natural friction. I kind of drew the analogy, and I admitted that yes, I was on a flight and I turned on a reality show called Couples Therapy. And if you haven't seen it, don't. It's okay.
I watched it. I can't believe I'm admitting that on live video, but yeah.
All right. So, but it is, yes, it's a reality show and it's real people going through couples therapy, which is kind of horrifying. But having heard kind of both sides of it, it does feel a lot sometimes like the relationships between lenders and vendors, where sometimes, again, they're stuck in this contractual commitment, but they, wish they could get out. Sometimes people are, feel like they made a really good choice, but they're having challenges that just seem impossible to talk about and overcome. And sometimes you have, more healthy relationships. And I've seen all of those, I think, especially the last 10 years of my career, I would say. So the article really is talking about, what are the issues and how do we start to resolve them? And yeah, one of the questions I actually asked, I had a group of executives in one of our workshops, and I said, if you could just tell your technology company and have it something and have it be totally anonymous, where you're not having to like kind of manage your partnership and so forth. And they pretty much unleashed. And again, I put the link to the article in there so people can read it. But, people right now are at a point where there is some sharpening of pencils and decision making around people's tech stack. There's a lot of technology that was acquired either by, acquiring or absorbing, loan officers from another company, or, hiring a big region. Sometimes you bring their tech stack with them. When money was flowing heavily, people, oh, that sounds good. I'll take 5 of those shiny objects, and people have kind of ended the day with what we like to call at Stratmore a Frankenstack. And so they've got this stack that does not make any sense, and a lot of their technology is not talking to each other. The data is not flowing. But I think most importantly, they feel helpless and on their own to try to solve it, because each technology vendor is like, well, our part works just fine. I don't know what else is going on. Our part works just fine. And the vendor is sitting there, or the lender is sitting there while they're in a tough market. They've got all kinds of challenges, and they're looking at, money pouring out the door to these technologies that aren't necessarily living up to their promises. So the headline I would say about this, though, is that there's, much like a good couples therapist might say, there's definitely some room for improvement on both sides. I think in many cases, vendors certainly will, share kind of, best practices and success stories. But very often, lenders, really want to kind of make the technology do what they want it to do, and it's not really what it was designed to do, and it's not the best way to do it. We like to say that everybody's favorite piece of technology is the one that they just got off of, in favor of a new one, because they love to say, it used to do this, it used to do this, it used to do this. Yes, but there's a reason you left. So the article really is about how do we, how do we help people come together on this? How do as technology providers, how do you in this market do a better job of really showing up and looking at things holistically for your customers that are going through a challenging market right now? And for the lenders who are going through a challenging market, are there things that you haven't maybe been willing to actually make a change on that you would benefit by taking that vendor's best practices and putting them into action?
My former role, was a network of lenders and vendors. So it's very interesting just for 8.5 years watching which vendors succeeded, did well, or still doing well today. And I think this was something you wrote about in the column. It was, vendors that truly seek to partner with lenders, that truly seek to understand the challenges of the model and work with lenders individually, not overpromise, and be honest about where they're at and integrations that they have or don't have, but that act more as a partner to the lender as opposed to, hey, it's 3-year deal. Hey, you signed it. Sorry, like call 1-800 the helpline, or talk to
Yeah.
your IT person.
Yeah, nobody likes that, especially when you're under pressure, like the market is in right now. And so I do think it's a great opportunity for the technology providers, to really step up and be there, for the folks that they serve. And, we've challenged people at Stratmore. We have this program called the Solution Provider Advisory that we have, it's for technology companies or people providing services to the industry, where we do help them make sure that they've got really good answers to, the pain points that you solve and how do you solve it? How do you prove it? Is there an ROI? What does the ROI look like? How can you showcase that, to your clients? Are you still dealing with the pain points that they have now? Very often I'll hear technology providers, we go to these conferences where you hear the 8-minute demos, right? And very often I hear people saying they're solving problems that were the problems of 2 years ago. It's like, you learned that pitch so well a few years ago, but that's not the pitch for the market that we're in right now. So how are you responding to where we're at right now? Have you adjusted your roadmap to what your customers are saying they're going to need right now and moving forward? Do you have success stories and best practices, and how are you helping with that change management in the face of a tough market? And I think more than anything, it's always about communication. Having, our business tends to be a relationship-based business. How are you developing those relationships after that sale? How are you showing up for those, the lenders, and helping them during a time when, they need to be squeezing more out of their technology than ever before. There's a lot of money going into technology, more and more money going into technology. And there's a lot of questions being asked about, are we getting the efficiencies out of this, or are we not?
And could be a new tranche now for mortgage lenders, in the wake of the NAR settlement, still so many unknowns as to, how things play out precisely and what the buyer's agent services market looks like a year from now. But the one thing I know for sure is all the lenders that I'm talking to that are clients of mine or just talking to on a daily basis, they are really, the way it's shifted their mindset is, just getting to the customer earlier into the process. And regardless of whether or not they're interested in having dually licensed loan officers or helping, prospective home buyers find homes and the other things that buyers agents do, I do think that mortgage lenders are really interested in kind of getting to that customer first and earlier in the process. And I was just on Dave Savage's Friday YouTube that he does, and we talked about it for an hour, just AI and how it's likely to be deployed with real estate agents and with loan originators. And where I'm going with all this is, something that you speak about often, Sue, is just customer experience, really differentiating yourself with home buyers. It to me right now, it's never been more important because you have limited transactions, limited inventory. Yes, we've had consolidation in the mortgage industry, but not enough to the point where every real estate agent or referring human in America, they have mortgage lenders all over them, desperate to get into that referral pipeline and get deals. So I guess my questions to you, Sue, would be, do you agree about the heightened importance of getting the customers first and, differentiating yourself, and, maybe how you see tech playing a part in that, or maybe just some of the things that we could see in the next 6 to 12 months, as a result of the changed game within the result of the NAR settlement.
So I have some thoughts on that, but I also have questions for both of you on that as well. Because yes, I agree. That's generally been, the name of the game is, how do you get there first? And, there's a lot of statistics around, whoever is the fastest to respond to a lead. If you have a call center and you're the fastest one, 72% of the time you're going to get that deal. Certainly that's a place where technology comes into play and can help you be their fastest. I will tell you that interestingly, our Stratmore colleague, Brett McCracken, has done a lot of work with secret shopping.
Yeah.
And a lot of it, surrounding, there is a lot of it that's around the technology that's at the front end, but also these leads that are being generated, true inquiries that are being generated, that are leads that are being given to actual loan officers. And I did something a few years back called the experience experiment, where I had, I sent, a few people out and they opened accounts and they, inquired about mortgages, and then they came back and reported on their experiences. And what Brett found in his secret shopping analysis and what I found in my experience experiment was it is still stunning to me in even the toughest of markets. You still see a lot of people not returning phone calls, not really willing to follow up on, here we've got these leads, these people hit the website. Loan officers don't, I hear this from lenders and I don't totally understand it. And so I'll ask you both for your thesis on this. It's odd to me that I've seen it. I mean, I've seen it. I've seen the data and the numbers, and I've heard the calls and I've listened to the recordings and I've seen what happens. And I don't understand why that is. And so part of, I presume the folks that are listening here, these are the people that are, not of that ilk, right? These are the people that they're here on this call. They're listening to this. They're engaged. They're trying, they're learning. They're wanting to plug in and understand the industry. But there is a horde of people out there that even right now in the market, the way that it is, don't seem inclined to want to follow up on leads or answer, phone calls. Or so I don't get that. So I do want to, kind of go a little deeper, talk a little about NAR settlement and how I see that might, playing out. But what do you make of that? Mike from Marketplace says call reluctance. Plain and simple, maybe that's it. But
it's the real thing. I mean, it's been 2.5 years of, such a tough sales cycle. I mean, the mortgage lenders I'm working with, that's something I'm working with almost all of them on, is, inspiring their loan officers, I guess, for lack of a better word, getting them to embrace, a LinkedIn strategy. And but I think the sales call reluctance I think it's a very huge part of the market right now. And to your point, Sue, it's kind of ironic because everybody's starving for business right now. So Rob, any thoughts on that? You hear from a lot of LOs in your commentary.
The ones, the loan officers that I mostly hear from or are in touch with, they're out there busting their hump, as they say. That's a science, that's a technical term, but I mean, they're out there.
Yeah.
And I would say I just saw a psychological barrier pop up there. My background is capital markets. We weren't so much in sales. And so I would imagine oftentimes it is difficult, even with a warm lead, it's difficult to make that call. And, they're probably not home, or they've probably gone on to another lender, or,
yeah.
our rates are too, who knows? But the more I'm in touch with people who are calling, they're out there, they're getting their stuff. I don't hear so much, at least that I can tell from the originators, who are kind of like, oh, well, I'm sure glad my wife has a job, because I'm not, I did a loan in March and I don't have anything in the pipeline. I don't hear so much from those folks.
Well, it doesn't surprise me. I mean, again, I would think the people that are, listening here, or, Rob, that are, connected to you, or Rich, probably, again, are in that, the go-getter phase. But I guess, maybe part of the encouragement is there are lots that are in the other bucket that it is about, as you mentioned a few minutes ago, Rich, it's it is getting there faster. And I would encourage people, based on everything that I again have seen of the real deal. And I'm talking, name brands, which I will name none of them, but everybody on this call would recognize every single brand, that, the secret shopping was done with, or that the experience experiment touched. And it was pretty stunning. And so again, sometimes that's encouraging that, you don't have to sometimes, come up with the most insane new strategy to figure out, how to do. Sometimes it's about blocking and tackling and making the phone calls. I was on a call 2 weeks ago with Shant Vanosian, #1 loan officer in the nation for like 8 years running now. And he's not talking about, oh, we do this wild thing where I'm using Bitcoin to come behind and buy the leads off of the back end of the whatever. He's not. He's building relationships. He's making phone calls. He's got a great, customer journey that, of course, he has a team help him execute. But there's nothing, he's got great real estate relationships. He shows up. And I think that, again, I like what Mike's saying here. He's like, the dollars are in the dials. Most relationships start with a call. And I do think, again, we have to go back and kind of remember. And I think these calls are probably frustrating. I think that's probably a big part of it, is that, if you're going to get on the phone with somebody, you're going to talk about all the stuff, and then they're not going to be able to find a house. Why make the call in the first place? I get it. Like, I totally get it. But I also know that these markets right here, the most successful loan officers that I know, these are the markets where they did the work and they built out their stake in the market. Lenders and loan officers, these are the markets that they go look back to and go, that's when it was, because we just hustled and did the work even when it didn't feel good. And so I guess there's a lot of people out there not doing it.
One of my clients is a big consumer direct lender, and I was talking to them this morning, and they said they are so very aggressively, like, their call center agents that are not, like, if you are falling behind in any metrics, the number of leads that are getting funneled to you is decreasing dramatically. That they're just, they're making very much more so aggressive changes in the methodology and how leads are funneled to agents. Just as, one example kind of exactly what you're talking about here, Sue. So yeah, it'll be interesting to see how it all plays out as we move into the summer months here. So just a couple minutes left in this week's edition of The Big Picture. Very pleased to be joined this week by Sue Woodard. And if any last questions or comments in the chat, this would now be the time for it. But following up on the topic, though, of getting to the customer and customer experience, like, what would you tell Sue, like the loan originator that is, kind of, struggling, considering a career change, like the way to differentiate themselves right now, like in the marketplace, and to make yourself, as you have on social media, and I mean, but on an LO level, any advice to shed for people out there looking to differentiate themselves?
The biggest thing that I would say is it is about education right now. And there's a lot of opportunities for it. I know people having really great success just doing a good old fashioned home buyer seminar, and again, even, Shant was talking about some of these strategies going to, and I never did first time home buyer strategy, sessions, because I thought I don't want to eliminate anybody who's maybe buying their second or third time and wants to learn, but going into employers, doing, big lunch and learn for the employees there. Those are easy opportunities to get. Quite honestly, you go to your past customer database, going out, you can do them online, you can do them live. There's so many different things you can do, but I'm into how can you make it as scalable as possible? So yeah, how are you educating people? The best strategies of people who are winning on social media in the mortgage world are the people who are kind of it's the combination of being slightly entertaining as they're educating, right? You've got just some great examples of people out there. NFM, Greg Schur certainly has some folks that are really, really good in that regard. Jordan Nutter, I think, is a gal who I think is just crushing it. They're an interesting person to watch what she's doing. But I just think there still is a lack of education. You hit it a little while ago. There's still people that think you need an 800 credit score and 20% down. There's a huge percentage of people that think that's still true. They haven't been along for the ride with us. So it's a time to go out there and educate and lay that groundwork. And there's a lot in our databases too. Re-examine your customer journey. There's people I've talked to recently, good companies, that they've said we've never really, as a company, ever had anything that was going out to our loan officers' databases. It's either the loan officers were doing it or, they won't. And you just think, we know what our retention rates are in the industry and they're not good, right? And so, yes, now is the time you're going to do some work that is not going to be as rewarding as it was a few years ago, but you are laying the groundwork for an incredible future. So I know there's a question here, I think from Mike. And I think this is an interesting topic. I'd love to talk about this a little bit and hear a little bit about what you both think. But Mike's question is the long-term view on buyer's agents after the buyer NAR class action and Department of Justice is done. What do you think, Rich?
70% are gone. A lot of dual licensing, real estate agents and loan originators. I mean, not 20%, I would say. 20% of real estate agents and lenders will dually license. A lot of buyers agents are just going to be gone or effectively gone. Yeah, and and I think you're going to see a lot of AI too, like just the hey, sign up for $99 or $399 and fill out this customized survey about your home buying preferences, and we will immediately set you up with showings within seconds of the listings hitting the market. We'll help you negotiate using AI valuation. So I do think you'll see dual licensing. I think you'll see a lot of buyers agents head for the hills. And I think you'll see a lot of tech that will emerge in this space that will seek to, provide buyers agent services essentially. So, but.
Oh, look at this. We got the AI takeaways from the meeting in the chat. Thank you. Thank you, AI chatbot. That's
But
that's
to your point, Sue, I can't believe we don't see more first-time home buyer seminar stuff going on. As somebody that lives on LinkedIn, I just don't see a lot of it, and it is kind of confusing to me. And advice I give my clients, because you've never had a bigger pool of wannabe home buyers ever. They're everywhere. Like
and frankly, I'd rather talk to a group of people. Like I'd rather do a seminar at a business or, do a webinar online. I mean, there's so many technologies where you can do these things now. So I would encourage people to, talk to your company, find out, what options they have, or if they, don't mind that you're doing it, go do it. I think and I would talk to as many people at one time as you possibly can. So doing it online or wherever you can, there's just such a lack of knowledge and education. And I do think then you put them into your customer journey and you kind of follow them along the process, that's where results ultimately come. I do think that it is likely, I mean, one of the things I've certainly thought, as you said, is if there is a dual licensure, and I don't know if that'll spell good things ultimately for consumers or not, but I do think that there will probably be a drive towards more transaction, like you pay for a la carte, I guess you'd say, maybe a la carte services by either real estate and or mortgage loan officer. If you don't want to
Rob, we
transaction.
talked to our friend Mark McCardle about this from the CFPB, and his take was kind of like, yeah, we're definitely the dual licensing thing. We're definitely, we're definitely going to keep our eye on this, but I think he felt like, just getting rid of the automatic 3% embedded in most deals buyer agent fee, that overall it would be a great cost saving thing for for home buyers, and that was more of their focus. But the dual licensing thing is it's gonna be interesting, because you're definitely I know there's companies already that are working on this, so see how that
I don't know, Rob, what's your take on that?
So earlier this week I published some pieces by attorney Brian Levy about dual licensing. It's in a state of flux, but from a compliance perspective, companies have to be very, very, very careful about having that. And you're right, Sue. We probably will move toward this kind of a la carte thing. But I continue to remind people, first of all, there hasn't been anything set in stone. And as a lending industry, we've overcome so many hurdles, Dodd-Frank, CFPB, TRID, LO Comp, the new 1003, all kinds of stuff. What have real estate agents had to contend with in the last 20 years?
Nothing.
Not much. They'll figure it out.
Yeah.
They'll figure it out.
Well, and I I would also just say, I mean, we've all been in the business in and around it for a while. And I remember when I started and houses were about, 40 grand in Minnesota, your average house, and you looked through a thing that looked like a phone book to find the listings, I mean, yeah, you earn 3% on that. You do start to question when houses are worth 500,000, people are finding their own homes, clicking it on Zillow and calling an agent saying, hey, will you come open it up? And it's not to, I mean, heaven forbid, I don't want to get death threats or hate mail. If there's agents here, I'm not saying that there's not a role for having that representation, but I have questioned. Yes, is it 3%?
Yeah, I make the argument that, especially with first-time home buyers, they need representation. If I'm moving to Minnesota, I don't know what, I'm looking at I'm looking at this house, I'm looking at an inspection. I don't know what I'm looking at.
Right.
Is mold a problem here in Minnesota? Are termites a problem in Minnesota? What about tornadoes? The agents do serve a role in terms of knowing what buyers should look at.
Yeah.
But yeah, 3% on, is it worth $15,000? I don't know, especially when that family has saved up for years for a down payment.
Right.
I don't know.
The beauty now with the settlement is we're about to find out what it's worth, right? Because it's worth what people are willing to pay, and eventually the things will settle out. Probably 1.5% at the end of the day when you ball it all up. The buyer's agent's fees that are still baked into seller's agent prices and the home price ultimately. People that do a la carte tech stuff that does it, lenders that do it.
Mm-hmm.
But we'll see how it all plays out. But as always, a great discussion. And Sue, thank you so much for joining us and
Sue, are you going to go to the game tomorrow night?
color coordinating outfits with me unknowingly.
I'm
Who
not.
says no?
I'm
Are you
not.
even going to
No.
watch it on TV, Sue?
I am going to watch it on the television, but yeah, we might check, but the tickets they're crazy for good seats, and I like to be able to pet my cats and get my own popcorn at home, so.
Good stuff. There you go. Yeah.
Is that alive? Is that, you check
Just
for breathing?
barely. She's
Put a
17.
mirror under its nose.
Hey, thanks for having me on.
Yeah, well, good stuff. And thank you to all of you for joining us live. And those that are listening on podcast, please like and subscribe, and same on YouTube. These go up, become podcasts and go up on YouTube within about an hour of the live. This week's live was 4:30 p.m. Eastern on Wednesday, but the normal will return.
Look at Rich. Look at Rich asking for more business, just like loan officers should.
I love it. I love it.
Put them in my customer journey.
Always be
Yeah.
close.
Yeah. ABC. Always be. Yeah, there you go, Sue. I like it.
All right.
Good stuff.
Thank you, Sue.
All
And
right.
Sue, we'll have you on again soon. Thank you so much for joining us. And we'll see you guys next Thursday at 3 p.m. Chris Bennett coming on to talk about the capital markets and rates, which always a hot topic, especially now. So, but until next week, have a great rest of your week, everyone. We'll see you on the big picture next Thursday at 3 Eastern. Thank you, Sue. Thanks, everyone.
Bye.
Take care,
Take
Rob.
care.